It's been a painful year for Bluescope Steel, forced to write down the value of its assets and undertake a massive restructure. The steelmaker's now revealed a second annual loss topping $1 billion. But despite the challenges that come with a high dollar, cheap competition and weak demand, Bluescope remains confident it's turned a corner.
Yeah, we've had 3 very, very difficult years, and I think each time we reported to the market, we've talked about the need to restructure significantly. 12 months ago, we announced a very large restructure in the Australian business, but at the same time, we focused on growth outside of Australia. And a week ago, we announced the joint venture with Nippon Steel. As a result of all of that, we have told the market that this half, we expect to be close to break even, perhaps not quite there yet, but that's as a result of some very significant interventions in our business over the last few years.
Mr O'Malley says the domestic market remains challenging. He's not expecting to see a turnaround in the construction sector for at least 12 months.
Look, I think consumer confidence is pretty low at the moment, but we have seen some significant reductions in interest rate. I think employment is still very high. If you look at those as leading indicators and house start applications, I think sometime in the second quarter of next calendar year, we will actually start to see some further investment.
Bluescope axed its export operations last year in the face of weak markets and a strong Australian dollar. The company slashing nearly 1,500 jobs and cutting half of its steelmaking capacity as it struggled to stay afloat. Mr O'Malley says the decision to exit the export business was the right thing to do. He's confident the $1.5 billion tie-up with Nippon Steel will bring growth and access to new markets in Southeast Asia and North America. Nicole Stevens, Sky News Business.